What is good, YouTube? It's your boy Sam, and we are back with another video. Okay, this is the third video I recorded today. So I usually drop one video a day, so it's not gonna be on the same day, but if you notice, it's the same setup. I'm wearing the same clothes. That's pretty much why. Okay, we're kind of on a roll here, and so I want to continue on this momentum. I want to keep giving you guys gems. I'm also looking forward to hearing from you guys as well. So make sure you use that comment section. Make sure you like. Make sure you share so we can grow the community, and make sure you subscribe so you don't miss the next video. Okay, now today we are going to be talking about taking profits. So it's not a whole new topic because I did mention it in the previous two videos. I touched on it a little bit, but this is important. Okay, this is why sometimes when you trade, and just generally speaking, not you specifically, but sometimes when most people trade, they feel like they can't get a break, right? Like they're always getting losses, they're always taking losses, and every time they're green, they're always missing out on all that upside. And it's okay to miss out on upside. We don't want to get too greedy, but at the same time, we definitely want to make sure that we position ourselves to make sure we get a decent amount of profits and it's worth the wait. Because usually we're waiting a decent time so we can get that proper setup that we want, and when we finally execute and we're successful, we're getting our emotions get the best of us and we're taking our profits. Okay, taking profits is good, but usually when you're right and the stock is now bullish, it's probably going to run without you. And I'm speaking from experience, right? I've definitely missed out on a whole lot of upside just getting out of the trade too early. So you definitely don't want to do that. Okay, the first thing that you're going to look at to make sure that you're not getting out of that trade too early, and we're not psychic here, so anything can happen. Okay, this is not law, this is not written in stone, this is just a mindset, it's a conversation. You might get something differently out of this than I got something, and that's okay, because as we learn from each other, right, we might share similar things that we both know, but at the same time get different things out of it. And that's what this is all about. Okay, there's not one way to do this, right? There's different ways to skin a cat. I'm sure you guys heard that plenty of times before. Now, taking profits. So, like I mentioned before, right, in the past I've done many trades to where I was red, and when I finally got that break, or I thought I was going to get that break, and I'm green, I'm like taking small amount of profits, which I'm happy about, right? Because why wouldn't you be? But there's definitely a lot that was left on the table, and that's just kind of where the emotions kind of kicked in. And like I said before, we don't want to get too emotional when it comes to trading. We want to make logical decisions, right? We might have emotions towards those logical decisions. That's okay, but this is not a I feel like a, or this looks good, I'm taking this. That is not how we do it, because that's not going to change what the stock is actually doing. For example, let's say you take trader A, who's an amateur, probably has, I don't know, 5 trades under their belt, which is not much. But let's just say they decided to invest $500. Somehow they are up $100, and because they're up $100, they want to get out. That could be fine, right? You take your profits, you stop the problem, you stop the clock, nothing wrong with that, but you don't want to make that a habit. With that being said, just because you're up $100, that does not mean that the stock is no longer bullish. In other words, no longer in an upwards trend. So that $100 could have easily been, just an example, $500 based off of what the stock is doing. And like I said, this is not a matter of being psychic. This is a matter of understanding the pattern, knowing when there are trend reversals, because trend reversals are a thing, right? An easy way to understand what a stock is doing, if you don't understand the volatility, you just pick a time frame and just kind of see where it's at from where it was at in the previous time frame. So for example, if you're looking at a weekly chart, is it higher than it was last week? Right? If it is, then it can be in an upward trend. I know that could sound very off. Okay, so let me reword that. Okay, usually trends are looked at as moving averages. If you don't know what a moving average is, we'll talk about it later on down the line, and that is what a lot of indicators use as well when determining trajectory and cleaning up a picture that could look so messy, right? Is understanding where the moving average is, and that just kind of creates a line, and it shows you the overall, kind of like a line chart, or overall what the stock is doing. It's basically answering the stock in a yes or no question, right? Is the stock going up? Yes. Is the stock going down? No. If it's going up, yes. It's an upward trajectory. If it's going down, it is in a downward trajectory. Okay. Now, when it comes to taking profits, okay, so you have to take a step back and not think about how much money you're investing, but more so what the stock is doing, what you're analyzing that the stock is doing. Okay, and so if you got to observe it a little bit to understand how the stock moves with no capital deployed in it at all, that is perfectly fine. Okay, you don't just go hopping into something and you don't understand it, right? You can take a step back, look at it, see what trend it's doing. Okay, if it's having a moment to where it's creating higher highs, right? Why wouldn't you want to capitalize off of those higher highs, right? Just because you're up a little bit doesn't necessarily mean you need to get out of it. Now, I gave you different strategies how to exit stock before in the past. If you have multiple shares and you see based off of your analysis that it is in an upward trend and it has a lot more room to go, like I said, not guaranteed. This thing can go plummeting down. What you want to do is you want to make sure you can secure some of your shares, sell some of your shares, and you ride the wave up and you start selling your shares at different increments as the stock increases. Okay. Highly recommend you don't buy in above your cost basis. Okay, and what that means is that's the average cost of all the shares you own. Because what you're doing now is you're bringing up your cost basis to where any move in the down direction, you have a higher, well, you're closer to being red than you would have been had you not purchased shares above your cost basis. Okay, so think of it this way, right? When you finally make a good move, be very strategic with how you get out of it. Probably more so strategic than how you got into it. That's the thing of the past. You're already in it. You're in it now. Don't just get out of it, right? Think about the different levels. Think about what you're seeing and take your emotions out of it. Don't let how much money you're up in a dollar amount affect you too much in your decision making, right? It's definitely something to consider, right? Because how much money you have deployed will change your risk level, and also depending on how much you're willing to lose and how much you have in your portfolio. But just really understanding and making a decision based off of your analysis of what you believe the stock is doing versus you being up $100, right? I already told you the power of capital. If you haven't seen that video, go check it out, right? But you might have $500 invested to where, you're up $100, and someone might have, I don't know, 500,000 invested and they're up 100,000, right? Like, yes, that other person has way more in it than you do, but that also does not determine what that stock is actually doing. So just making sure you understand that so you can really just capitalize off the upturn. All right. See you guys on the next one.